Good evening. Welcome to ShadowTrader Video Weekly for Sunday, September 23rd, 2018. A few things to talk about in this video. If you notice, I titled it How to Play the FOMC Next Week. I'll just, at the end of the video, I'll give you a quick sort of idea for kind of how it's probably the most best risk reward play, I think, to kind of play a big move in the Fed. Nothing too complex. But first, let's get into some technicals. So we have the S&P chart here in front of us. Thinkorswim is acting up this fine evening. This is Saturday around 6:15 p.m. So I'm using some different charting and options packages, which you'll see. But we're kind of bumping along the top of this channel, which I think is problematic. You notice that here on Thursday, Friday, we went to the channel, and then Friday we actually moved up a bit higher, but weren't able to hold it and sold off, and we're kind of just right at it. So this is slightly dangerous. Usually what happens is when you rise to the top of the channel, at best you'll go sideways for a couple days, and then you'll start a downdraft there. So notice we haven't touched the 50 since July. It's been quite a while. We've remained above the 50. So I do think the market is somewhat vulnerable to a sell-off. All right. That being said, technically everything still seems okay. I think the NDX is showing a little bit of relative weakness. Notice that the bar is larger to the downside, going all the way to Thursday's low on Friday. I find that interesting. I'm going to talk a little bit about that in this video as well. It's basically the weakness in the FANG stocks that is causing this. So main key area, I think, in the NDX, and this also really holds for the broad market as well, is these lows here in the NDX, which is right at 7,400, they need to hold, because if not, I think we're going to see the downside of the channel here, which is around 7,200 in the NDX. So that's very, very key. I want everybody to pay attention this week to what happens there. One of the indices that I don't talk about very often, because it's only 30 stocks, is the Dow, but it actually needs to be talked about in this video because of its relationship to its channel. Look at the huge overextension. As money has rolled out of tech, a lot of it has gone over the last few days, at least, as you can see from the chart from this week, into more old economy, Dow type names, industrial, etc. That has caused the Dow to rally quite a bit, but in its rallying, I believe it is now setting up a short point where right up at around 26,900, which is right up at the top of the channel. So it would be very nice if the Dow could just push up higher a little bit more. I think the play there is to use the DIA at the 269 puts. And what I'd be looking for here, honestly, is a move to about 264. I'd be looking right here, just above this breakout level. I think that's not too much to ask, especially because if you look at it, it's really only 50% of the move. If you bracket it like this, down to the 20 MA. A larger move down would probably retest the 20 MA, but I think it's pretty safe to say you could probably be looking for like a 269, 264 put vertical in the DIA that's going out about 2 weeks would probably be good, and I'd probably be doing that as a risk reversal. I'd be selling some put credit in the Dow, maybe above, outside of the channel, say 270, 271. Is where I'd be selling a call vertical to finance some of that put vertical. So there's a trade idea for you there. Okay, I want to show you something that is really downright scary from our website. And no, I don't mean my picture here on the homepage, although that is pretty frightening in and of itself. But really this money flow update that Dano puts out every now and then. This is from our free Swing Trader newsletter, which is a huge value. I think if everybody checks this out every day, it's pretty amazing. He's doing some pretty amazing trades in here. And every now and then he has this proprietary indicator called the money flow, which measures actual money flow on a tick-by-tick basis in a number of different sectors, which he tracks, and he updates it daily, and he plots it against the S&P. And look at what it's been doing as of late. I mean, this is just horrific. Notice that in the magenta here, he always tells you when was the last time he posted it. So see here, on October 31st was the last time that he posted the money flow. And notice that the S&P was here. Now the S&P is here, much higher, correct? And here, when we last posted on the money flow, it was here. And since then, the S&P has gone sideways to up to a new all-time high. And the money flow has absolutely just fallen off the cliff. So this takes a little bit of time sometimes to play out. But generally, it's never wrong. Usually, you do get a larger downdraft when you see a divergence in the money flow. For instance, when the S&P here into last year started to rally, look at this. This is December of 2017. And notice that the market already, kept going up, and the money flow actually peaked here, right around late November. I'd say late November. So for a whole month here, market went up, money flow went down, tried to rise here to a much lower high, correct? Lower high. And here is your February peak, and the market just got killed. So this is actually really interesting. I want everybody to pay attention to this. There's no specific day when he posts it. The exact details of how this is calculated is somewhat proprietary, but I give Dano a lot of credit for this, and I just wanted to point it out that it is definitely flashing a pretty bearish signal right now. And again, as I said before, it can take a little bit of time to play out. As you can see here, this was very key that it actually peaked long before the market fell apart. So that's important to note. All right, let's take a little bit of a look at market profile while I have you here. On the downside, if we are to see a downside, and there's some upside references as well, but there are some nuances here I definitely want to point out. Okay, first things first. We could have another all-time high, only because the odds don't favor that the all-time high would happen in an overnight session. I just want to say that on Friday, we missed taking out the all-time high by just a little bit, and that leaves the all-time high in the futures in an overnight session. Again, things don't usually end that way, so just keep that in mind. However, on the downside, we've got a lot of references. We have a relatively large gap yawning beneath us here. We have a prominent virgin point of control here. That means when you have a very fat, wide part of the profile that hasn't been tested. So that's very, very important. So if you're playing on the downside this coming week, I want you to be targeting probably this 29.1450 ultimately, because most virgin points of control do fill. So keep that in mind. All right, so that's the situation with the profile. Quick reminder, there's not too much time left now to sign up for the Jim Dalton Intensives. Check it out here under Futures, Market Profile, and it's Course 1, Course 2, and of course the Course 1 and 2 bundle. Just want to mention that through ShadowTrader here, you can pay a cheaper price, which is $10.95, and that does start on October 2nd, and it is an entire month of immersion in the market profile with my mentor, Mr. James Dalton. Okay, next week, one of the things I want you to also keep in mind, and this kind of hinges on some trade ideas, although I don't have any real specifics, but I want you to watch the fact that FANG has gotten a lot weaker, and Friday was a really weak day in FANG, correct? Look at Amazon, or rather Facebook, with the bearish engulfing candle, and notice that twice it failed right where you would expect it to fail, I guess, right at the 166, 167 area, which is the prior low. So trading very technically, very clean. I would think there's even a chance that we go all the way down to the 150, possibly. That odds of that would increase if we break the 160. So you can kind of be just using this information as a way that you may be looking to set up some trades. I think I haven't looked at any puts recently, but if you were of the put selling type of inclination, where would you want to be short calls? Excuse me, I apologize. Not puts, but where would you want to be short calls? Probably above that 170 line. So there's another idea there. Apple is starting to peel off, although not all that much. It's a similar chart to Amazon. I'm thinking if you can get down to the 210 at the 50 MA, it's probably a buy. Boom. Notice how the arrow ties right in with the trend line with the lower channel right to there. So 210 is going to be a buy point in Apple. Amazon is relatively weak, and this will be very interesting if it doesn't hold the 50, because usually well, actually, I shouldn't say that. Usually it can go through the 50. I mean, here we gap down through the 50. Here we traded on either side of the 50. So it doesn't really mean that much. It doesn't hold the 50. But Amazon doesn't have real trendline support until about 1700. So just kind of dribbling lower. And Google looks very much like the Facebook chart, right, where you have this. This is a very interesting chart, actually, because it's a look above and fail. And remember that look above and fail almost always targets the other end of the range. So this is actually a trade I may be looking for myself early in the week, looking for the 1160 puts to get in the money, because we usually, like, basically what happens is when you have Look above and fail is when you have range, and then you look out of the range, which you did here, but then you fail and go back into range. The target is the other side of the range. Okay, that's how that works. And Netflix is actually showing some relative strength, I think, because notice that it is just kind of dribbling lower here. That actually could be a bullish setup. We'll see if it holds its trend line. So this week, when you're looking at these FANG stocks, what I want you to be paying attention to is notice the relative strength, the relative weakness. A lot of them have showing relative weakness. If they continue to go down, it's going to continue to be a drag on the market. If and when they catch some traction, that could be a short-term bottom, so we shall see. All right, all of this, however, is in context of the very important FOMC meeting, which is happening on Wednesday. Why do I say very important? Simple, because they're actually going to do something this time. Most meetings every 6 weeks result in nothing. This week, there is a 98% chance that they raise rates by another quarter. So get ready for that. How will the market react to that? I don't know. It could be up. It could be down. I tend to think it's going to be down this time. Lately, the moves have been very muted. It's just been a little back and forth and not much else because the Fed is being very transparent. And also, they haven't done anything. They haven't moved. So it doesn't really shift the plates at all, right? Nothing really happens. But in this particular case, they are going to raise rates. And one of the ways that you can play this, which I think is really kind of simple, is to be looking at the puts and calls that expire on that day. Those of you that don't know, we have had 3 expiries a week now on the SPX for quite some time now. So notice that these are the ones that expire on Monday, September 24th. And notice that here, with the market closing at about 29.29, right, you've got the at the money about anywhere between $5 and $6, right, in terms of the of at the money. Okay, but this is still with 2 days to go on the 24th, which is on the close of business Monday. Now, imagine that we advance the clock to Wednesday at 2 p.m., which is here. They're now 4 days out. Like right now, of course, they're quite expensive, still 4 days out. But remember, you will be looking at these puts and calls when there will be exactly 2 hours left. So there will be big opportunity. Now, obviously, will there be a little bit of extra volatility pumped into those prices because of the FOMC announcement? Certainly, but there will still be huge mispricing, I think, in out-of-the-money puts and calls. There'll be probably a decent-sized move, let's say 20 points in the S&P. I think more or less down. I'm going to be looking at some puts in the SPX on Monday, probably a few cheap ones, $10 or $20 out of the money, and maybe even some at-the-money ones. Hopefully, they'll be trading for about $2 at that point, since we'll only have a couple hours left in the session. So that's one way to play it. All right, we shall see. All right, that's all I have for you guys today. Hope you enjoyed it. This has been another edition of the Shadow Trader Video Weekly. My name is Peter Rezicek. As always, on behalf of myself and the entire Shadow Trader team here in beautiful Philadelphia, Pennsylvania, I wish you good trading and good night.